How much money is needed to buy a house in 2021? If you're thinking about buying a house in 2021, you might be wondering, well, how much money do I need to buy a house? Beyond mortgage payments, we're going to be talking about 4 things you need to keep in mind when considering buying a house and how much money you'll need to set aside to get started with your home ownership journey. Please stay to the end because I have a bonus tip that's very, very specific to 2021 and in this current real estate market that we're in. Before we get started, if you haven't already subscribed to this channel, please take a moment to do so. I've been helping people realize the dream of home ownership for over 25 years, and I would love to have you on this journey with me. Okay, so let's get right into the question. How much money do I need to buy a house in 2021? First, earnest money. Once your offer is accepted by the seller, you are going to have to give the title company your earnest money. Now, earnest money is considered good faith funds, and it is built out in your purchase contract, and your real estate agent will let you know how much earnest money that you're going to need to deposit into escrow, i.e. with the title company, and that is going to be due immediately after your contract is accepted. Now, depending on the time of day, etc., just think kind of next business day, you will be needing to send your earnest money to the title company, and it's actually on page 1 of your purchase contract. It will be detailed. You'll see your offer price. Your real estate agent will note how much earnest money that you are going to be depositing into escrow once your contract is received, and then it's going to give a balance of your remaining down payment and then your loan amount that you're expecting to finance. Now, keep in mind that your earnest money will be applied towards your closing cost and your down payment at close of escrow. So it is definitely your money. It's just kind of like a pre-deposit towards final closing figures. All right, number 2, down payment. Now, down payment is going to be based on a variety of different things. Primarily, though, it's really going to be based on your loan program. And so if you are, for example, purchasing a house with a VA loan, you may not have a down payment. If you're doing a conventional loan and you're a first-time home buyer, then you can do as low as 3% down. There are some conventional loan programs based on income that you could still do a 3% down even if you're not a first-time home buyer. And then FHA is a 3.5% down payment. So down payment is going to be based on your loan program, absolutely, without a doubt, and then any special kind of circumstance that you have. Down payment funds are due at close of escrow. So just kind of know that from a lending perspective, we are talking with our buyers up front, wanting to know where those down payment funds are coming from. Do they already have the funds? Are they being gifted to them from a family member or relative? All of that goes into the equation and the process. So making sure that you're communicating with your lender on your down payment funds. And if something has changed, meaning that initially maybe you were going to take out a loan on your 401k, and then maybe something changed in the process by the time you're under contract, and maybe you're going to get a gift for your down payment. All of that is okay in most cases, but from a lending perspective, we have to track all of that money. So making sure that you're keeping in touch with a lender and they are aware of what your intent is and where you're going to get your down payment funds. Now, also, if you're using a grant program, it may help you with your down payment and or closing cost. Every state has a different take on grant programs. There are pros and cons to every home loan out there. So again, making sure that you're working with an experienced loan officer that can give you the intel that you need to make an educated buying decision is absolutely important. So for example, depending on which conventional loan that you're using, if you're doing 3% down, then the cost of your mortgage insurance could be higher than if you did 5% down, 10% down, or 20% down. So the down payment is going to drive the cost of your mortgage insurance and in some cases the actual interest rate. Number 3, now there are some additional fees that are going to come up in your conversation between your real estate agent and your lender as you move through the home buying process. One of which is going to be the home inspection fee. So from a timing standpoint, your offer is accepted. You've given your earnest money to the title company within 24 hours of your offer being accepted. And now your real estate agent is going to be in touch with you to discuss scheduling a home inspection. Now, a home home inspection is different than a home appraisal. The inspector is going to come into that home and they're going to be looking at all kinds of health and safety things. They're going to be looking at things that might need to be addressed with the condition of the home. And then they're going to give you and your real estate agent a report so you know and have done your due diligence. You know the bones, you know if there's anything wrong with the house that is detected at least at that point. Now you're going to pay the home inspector up front when they complete that inspection. So just know that fee can range depending on price point and if there's a pool and where the property is located and any uniqueness to the property. But in your head, your real estate agent will be able to tell you what that home inspection fee is, but kind of think probably anywhere between, I'd say $300 and maybe $700 for that home inspection fee. That is prepaid upfront directly to the home inspector at the time of the inspection. Now, once you're through the home inspection and you are good to go, you feel comfortable buying this house, the home inspection didn't bring forth any major concerns, the next step in the lending process will be to order the home appraisal. Now, the home appraisal fee will vary based on lender and again, uniqueness of the property, price range, etc. And that appraisal fee can range anywhere from $500 up to sometimes $1,500. For a very special property or a higher price point or market value property. But on average, if you think between $500 to $600 for an appraisal, that in most cases is a very fair number. Now, many lenders will require that the appraisal be paid once the appraisal is received from the appraiser to the lender. So when we think about upfront fees, think your home inspection fee and that appraisal fee to be collected prior to close of escrow. Now, all of the other fees that go into the home buying process generally are collected at close of escrow, meaning that you would go into closing with your remaining down payment funds and your remaining closing cost. Number 4, closing costs. Now, I get this question all the time. What are your closing costs? Well, that is like a loaded question. So first, know that really closing costs it's a big number because it's made up of a lot of different things. So what you want to know is the estimate on the total closing cost, not just what the lender fee is or what the appraisal fee is. So when we think about closing costs, they're really broken down into different quadrants. So 1, how much are the actual closing costs for the lender? How much are the costs for the title company, which are going to be due at closing and are also considered closing costs? The appraisal would be included in that how much are your closing costs question. And prepaid interest, which will be based on when in the month that you're closing and when your first payment is due. So that is considered a closing cost. Any HOA transfer fees or capital improvement fees that a buyer is paying, those get calculated into closing cost. Any upfront HOA dues would be calculated into closing cost. And any discount points that a buyer might be paying to buy down the interest rate would also be included in closing costs. So closing cost is a really kind of wide conversation, and what you as a buyer will want to do is just get a very detailed kind of line item of how all of those costs are included. And don't forget too, if you are having your property taxes and your homeowner's insurance included in your mortgage payment, you may also have to deposit a couple of months of property taxes and homeowner's insurance into what is called an escrow account, which is essentially just like a little savings account that the lender holds on your behalf. So you're going to deposit a couple of months for taxes, homeowner's insurance into your escrow account. Those are your funds. You're kind of advancing those. And then every month when you pay your house payment, part of your payment will be allocated to that escrow account. It will grow over time. And then it gives the lender the amount that they're going to need to pay your taxes and your homeowner's insurance when those come due in the subsequent years. Oh, and on that note with insurance, generally, if you're including that in your mortgage payment, your first full year of insurance will have to be paid at close of escrow. So when we think how much are your closing costs, lots and lots of variability there based on the price point, what type of loan you're doing, escrows or not, etc. Again, your lender will be able to give you a very detailed summary of how much you can expect your closing costs to be. Just to give you a general idea, if you're purchasing a house, let's say under $400,000, you could expect in this market closing costs to be right around $5,000 to $6,000. Now again, if you're going to pay a lot of money to buy down that interest rate, those closing costs could be higher, but on average $5,000 to $6,000 seems to be the number. All right, for that bonus tip, in 2021, with this highly competitive real estate market, it's not uncommon to see buyers waive the appraisal contingency. So essentially what that means is if the house doesn't appraise for the purchase price, then in most cases, without waiving that appraisal contingency, a buyer would be able to go back to their real estate agent and to the seller and negotiate a reduction in the price based on whatever the house appraises at. Like that's normal, an everyday normal market. But in 2021, that's not happening because in order to compete, many buyers are having to waive that appraisal contingency, which essentially means that no matter what the house appraises at, they are prepared to go into closing with the required funds. So here's kind of how that works. Let's say that the contract price of the house is $500,000. And let's say that the buyer has waived their appraisal contingency, which means that doesn't matter what that house appraises at, they're buying that house. They cannot cancel the contract if the house doesn't appraise at the purchase price. Let's say that the house appraises at $475,000. From a lending perspective, important to note that the lender's down payment and the guidelines for the home loan, the down payment is based on the lower of the purchase price or the appraised value. So in this scenario, the down payment would come off of the $475,000 number. Plus you would go into closing with the difference between the appraised value and the purchase price. So in this scenario, that's $25,000 plus your closing cost. So my bonus tip is, in many cases, in this hot real estate market, we are seeing buyers waive their appraisal contingency. So if you're wanting to really know what that means in your situation based on your price point, an experienced lender will be able to walk you through those numbers. So again, from a lending perspective, we are going to lend on the lower of the purchase price or the market value. It's okay. Don't get wigged out about this. I think a lot of times we hear this waiving appraisal contingency and people get afraid. It's happening quite often. And again, whether you do that or not is based on you, your decision to buy that house. Your real estate agent will be able to give you insight as well. From a lending perspective, our job is to make sure you understand the numbers. So when you get down to the close of escrow, there are no surprises. If you got value out of today's video, please give it a like. And if you have questions, comment below. And don't forget, share and subscribe.